Hello and good morning everybody. Welcome to the Elite Traders update for this Thursday 24th of November 2011. Guys, a quick review of markets and a look at open positions and any opportunities coming up. Last night, firstly, starting with the Dow Jones, the bellwether of all indices, we saw the Dow Jones fall about 236 points. It was quite a large sell-off within the last 10 minutes or so of this market. Pressured selling towards the end of that US session. Now, the fear that we saw last night was mainly due to the failed auction of German bonds. They failed to sell about 1/3 of them, and in light of that, and in light of German bonds, of course, being a safe haven, we've seen the market fall quite substantially. It's almost like comparing treasury notes as a safe haven, but the bonds are obviously for the Eurozone, and as a result, that failed auction has really sparked some fear in the market. So a big sell-off, as we can see there. The Dow Jones has previously taken out that level of support that we saw at about that 11,600 mark. It's crashed through that. We're sitting on some support. We can see where the low was made earlier in October, and the next level that we can see downwards would be close to 10,400. Now, nonetheless, we do know that markets right now are trading more or less headline to headline. And in light of that, I think we could see a bit of a dead cat bounce in the coming days. Something to take into consideration, though, is that is the public holiday that we've got in the US for Thanksgiving. So we're going to see US markets close, and of course lower volume as we've seen for the last couple of weeks as well. Over to the economic calendar for a moment. Compliments of daily FX, thank you very much. And we have, as we can see from last night, we have those durable goods orders that came out in the US, down 0.7%, personal income 0.4%, and also personal spending as well. There's also been some jobless claims. Benefits rose about 2,000 for last week. So all in all, where do we see the equities markets going? With the negative sentiment in the Eurozone, I think we're going to continue seeing some pressured selling within the equities markets, especially that of the Dow Jones, but I wouldn't be surprised if we see a bit of a bounce. So look to sell this market on any pullbacks that we see, especially back to that 20 and 40 moving average. I'd like to see a bit of breathing towards those levels, and then we'll look at getting short some positions from there. Alright, moving on, what else can we have a look at? I want to check out gold for a moment, an interesting one. We'll bring up the spot gold chart on this platform here. An interesting one with gold at the moment, especially across the US dollar, where we're seeing quite a significant amount of volatility, retreating back from that 1800 mark only a couple of days ago, crashing below 1700, a low of 1666. And where do we see this going right now? I think it's very much dominated by the US dollar, the movements that we're seeing in the greenback, and interesting times right now where we're seeing a lot of money flow in to the US dollar in the greenback as opposed to treasuries and as opposed to gold even in some instances. So most definitely the safe haven, and that is what's causing the volatility here. One interesting one for those of you who closely follow the technicals as well, pick this one up from well-known commodities trader Dennis Gartman a while ago. And if you have a look at a moving average, plot a 150-day moving average onto gold, any gold chart, put it on a daily chart and put 150 days on it. It's very interesting to see, if this loads up properly, there we go, it's very, very interesting to see that out of going back the last 2 years, there's been 9 instances where the gold price will just skim on that 150-day moving average, just hit it, and continue to increase and return to its normal trend after that. And it's done it just recently as well. As we can see, we saw that sharp sell-off down to around 1530 only last month, and since then it's actually hit it again, it's bounced off, and we're getting very, very close to that mark. So as a bit more of a speculative buy limit order, we can be looking at a long from around that 650 mark to be getting long on spot gold. But even so, I think the US volatility there is something to take into consideration. You can trade it from a purely technical point of view, but to be quite honest, I much prefer gold euro. We've had quite a bit of success with this one. We traded it last week and turned a nice profit. We're going to look at trading it again. Again, the point of foreign exchange trading is to match an appreciating currency with something that is depreciating significantly, and we know the problems within the Eurozone and what the market is anticipating there. We're going to look at a short-term breakout on this one. Should we see a breach of around that 1280 mark, we'll be looking at establishing some longer positions. Stop losses are going to have to sit at around that 1235 as a protective stop. You could do a little bit tighter, but you're going to need to see a really nice break through that 1280 mark in order to do so, and then we'll look at vigilantly maintaining and reducing risk in this position by using trailing stops and steps. Now guys, moving on to the pound US dollar. As we know, we are long US dollar at the moment. We do believe that in light of the fear worldwide, we are going to continue seeing a flight to safety to the greenback. In light of that, we took a position in the pound US, a short at 15605. We entered that particular position yesterday as a short, protective stop at about 1.567. So just here, that was just as a break of existing short-term support. Now we're in that. We saw a bit of a pullback. Subsequently, the price has now fallen to 1553. So we're up about 80 to 90% in that position, or closer to around 80 pips. Our profit target sits between that 1.543 mark, and what we'll be looking at doing is just moving stop losses today as well. So we'll look to reduce risk on that one, most likely to around a break even, so that we've got a free trade there, but do believe that we're going to see further pressured selling within the pound of the US dollar to reach our profit target down there of around 150 pips. So is looking quite good. Our other existing position as well, the 3-month euro dollars, we're looking at June 2013, which, as we know, is more so correlated with the bonds and the treasuries, more so than anything. We've seen a bit of a sell-off there as my chart loads. There we go. We've seen a bit of a sell-off there. Originally got in about 99.2 with a couple of contracts there. 99.26 was our stop loss. Current price that we're seeing is 99.15. What we're going to do is actually look to scale into this position. So we're in profit now about 0.05. We'll look to move our stop losses to at least break even, so we've got another risk-free trade. We'll look to enter under this existing support at 99.13, where we can see it's actually tried now 3 times. So stop loss for that one will be closer to around 99.2 once again, about 0.06 or 0.07 away. So I must say, probably one of the most consistent markets that we're seeing at the moment, at least staying in a trend for a couple of days. It's got some sustained direction, which is really nice. Gives us that opportunity to be able to really capitalize off those movements. So looking very good. Excellent. Guys, if you want any more information regarding Elite Traders, our recommendation and discount full service broking, please don't hesitate to call the number on your screen. My name's Matt Dibb. It's been a pleasure talking to you, and I'll check in with you tomorrow. Thank you.